Welcome to Drill Down Earnings. We have second quarter results from ServiceNow. This is a business story, of course, between one stock and a move. That stock that is moving indeed is ServiceNow. I'm Futurum Group's Chief Market Strategist, Cory Johnson, and we care about ServiceNow a lot because ServiceNow is a company that maybe more than any other is deploying AI to companies of all stripes and sizes. And guess what? It's working. These numbers are really good. Wall Street likes a beat or a miss, and this was a beat, even better than Wall Street's very high expectations for this company. Here's what the company did, the actual numbers. So they beat Wall Street, their own guidance and Wall Street expectations, whatever, with top line growth and profitability better than expected. They're raising their subscription revenue estimates for the year to 22% growth, which is even better than they had prescribed before. Now, the company's revenues, $2.5 billion in subscriptions. That was 23%. So they're suggesting that growth will be a little bit slower going forward, but not much. And total revenue in the quarter of $2.627 billion. When we dig a little bit deeper here, the subscription revenue growth has almost always exceeded their guidance and their prediction of what it was going to be both going forward, even as they raised that guidance, and what they'd done in the past. But this quarter, I'm showing you kind of a confusing chart maybe, I don't know, the bright green is what they did, 23%, or what they guided to, 24% is what they delivered, but 25% was last year. So last year, the business was growing just a little bit faster. It's something to keep an eye on. I don't think we're at a point where we're going to think the law of large numbers matters a lot here, but they're not growing at the blistering pace they were last year, just slightly less blistering, if that's a thing. But their bookings were great. Remaining performance obligations of $18.6 billion. Fantastic growth there and growing faster than revenues. And their customer relationships in any way you look at it. So if you look at how many customer relationships they have, that number continues to grow and is doing very well, and there's a lot of dollars involved. Renewal rates are fantastic at 98%. And when companies renew, they spend more and more. And so it's just impressive numbers from sort of every way. As the customers stay with them, they spend more as long as they are customers. And as a result, ServiceNow is doing a thing that no one else in the technology is doing. They're adding bodies, they're hiring. They were at 21,000 workers a little over a year ago. Now they're near 25,000. That's substantial growth in headcount from this company, even as revenues are growing. They are pedal to the metal in taking this AI thing on and deploying it to the workforce and deploying it to the economy. And like I said, it's working for ServiceNow. So how did the stock react when the numbers came out? It went up. That's what this stock tends to do, up 7% in after hours trading. And that's on top of a 26% move over the course of the last year. So this has really been an impressive business from ServiceNow. Now, Bill McDermott, who is one of my absolute favorite CEOs, he was when he was at SAP and even more so now at ServiceNow. So you'll hear why we like Bill McDermott so much in this soundbite, because he talks about getting in with skeptical CEOs, trying to explain to them why they need to spend money with ServiceNow and write those orders, sign those POs, and get AI into their enterprise. He says they can do it, they're proving it. Here's his proof.
We have to get in there and show them all the use cases, show them the demos, show them the customer success stories, give them the handful of references that are already doing it. And before you know it, we're off to the races. And then we show them our roadmap for where we're taking the company, and they realize they don't want second mover advantage. Because if other participants in their industry move out and they don't, they could lose. And also, if you think about employees, soon employees won't tolerate the nonsense that's going on with 800 numbers, busy work, silly work that doesn't make a difference, and they'll go work somewhere else. So the same thing is true with customers. So I think that it's an education, it's a demonstration, and it's having the validity of success where you have permission to go into the C-suite and they're interested in listening to your story. Once they hear our story and once they see us in action, it's an order, and then it's a quick install, and then it's a go live, and then it's amazing productivity. That's what's happening.
So yeah, that's the enthusiasm of Bill McDermott, and it seems to be working at this company, growing real fast, booking a lot of new deals. But the one number that you want to take away from this to remember this whole quarter for ServiceNow, I'm going to have the drill down earnings bite for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So ServiceNow Q2 earnings, here's an essential summary of everything you need to know. A fantastic quarter for ServiceNow. The company booked $2.627 billion in revenues, representing 23% growth. And I think that's your big number right there. 23% revenue growth on an already big number for a company that's deploying AI into enterprises and booking new business even faster. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson with 6.5 Media. Of course, you can also check us out. Check me out at Cory TV on X, TikTok and Instagram at Drill Down Pod, and all kinds of earnings reports on the YouTube page of 6.5 Media. And leave us some comments. Follow us, like us, dislike us. But tell me what you think. Tell me what you'd like to see more of, and we'll do it.